Good morning and welcome to episode 8 of season 2 of Wattle Partners Market Thinkers series. This series being dedicated to understanding more about big themes or trends that are playing out within the world that we invest. And most of you know, picking a trend, even though not guaranteed to provide success, it still remains one of the most powerful, if not the most powerful element in portfolio management and growth of one's wealth. At Wattle Partners, Drew and I, at the start of each investment committee, we sit down and the first agenda item is always about themes and making sure that clients' portfolios are exposed to the themes that we think that are playing out around the world. Today, we'll be talking about big data and cloud computing. Our guest and expert on the matter is Matt Fist. Welcome, Matt.
Thanks, Jamie. Excited to be here.
Welcome, Drew, co-host and my business partner.
Thanks, Jamie.
Matt is a portfolio manager at Firetrail. Firetrail specialises in Australian equities, and Matt specialises in the smaller variety of Australian equities, and they tend to be more growth companies. And growth companies over the last 5 or 6 years have picked up these trends better than most of their competitors. So we thought Matt was in a perfect position to talk about these two big themes, big data and cloud computing. Drew, do you want to just kick us off and start the introduction about these two big themes?
Yeah, thanks, Jamie. I'm probably not the most technologically advanced person, but it's probably a good place to start is with some, personal experience in the sector. So Everyone had the experience last year using Zoom for Wattle Partners when the lockdown happened. It was actually far more seamless than we could ever expect. How we could easily work from home within about 5 days and securely, and all of that was because of the cloud. So we'll go through a bit more detail later, but things like the way we delivered reports and advice to clients via things like DocuSign in an encrypted way, via the way we stored documents through Microsoft's different platforms. I think people probably simplify it and say that's the only part of the cloud, but the cloud is much broader. So I thought maybe a good starting point was for Matt to explain to us what the cloud is. Is it up there, up in the sky above us, or is it? How does it work? Who's connecting to it? What are the different parts of the cloud?
No worries. We'll dive straight into the deep end then. Thanks, Jamie. Thanks, Drew. It's great to be here. And as you say, there are definitely some exciting opportunities in small caps, and in particular in small cap names exposed to the cloud. So what I'll do here is just go ahead and share my screen so that I can reference some slides as we do.
Great. There's no clouds in that picture, mate.
So what is the cloud? Well, it's a very interesting question, and it's actually simple and complex as you want to make it. But the example that you point to just then, Drew, is quite pertinent. I think the cloud really simply is just hosting what used to sit under your desk, probably in the form of a big square-shaped computer box, virtually off-site. And instead of accessing that via a cord that connects to your computer, you access it via the internet.
So when Jamie first employed me, I used to have to take a tape home every night. Is that kind of the new version?
I'm sure you guys have progressed a fair bit since then. And so if I think about what that means in a practical sense, when I first started at Macquarie quite a few years ago now, we actually used to have a little server sitting in the corner of the room. It was quite noisy. And all our computers had a physical cord that actually went from the computers at our desk to that server. And you needed to shut the door on that server because it was quite noisy and quite hot when you went home. These days at Firetrail Investments, we're not the world's most technology savvy people in terms of our own hardware, but all we're running at the moment, as I'm sure most of you are at home, is a laptop. And all our applications are based virtually. And in that diagram here, you can see that represented with those servers. So quite simply, all the applications and all the data that I'm accessing isn't located on my machine. It's more than likely located at a data center, probably out in Deer Park or somewhere like that, or potentially if you're in Sydney, it could be in somewhere like Macquarie Park, where there's data centers that are located that are actually containing what used to sit on your desk.
Yep.
Now virtualized.
So the servers still exist. They just exist off site, really, or somewhere around the world that you can get your data from.
That's exactly right.
Yep. Great. We'll cut that bit out.
Would you like me to go into some of the associated technologies? Because we hear a lot about all these buzzwords: big data, artificial intelligence, machine.
Yeah, let's. How does the cloud? So we've kind of got the cloud. How does big data fit into the cloud? Is that a separate theme, or is that a separate thing? What's big data?
So big data is really quite simple, and it's just in the name. It is increasing amounts of data.
It's big data, is it?
It's lots of it. You're exactly right. And when we think about that, there's the 3 V's. So there's volume, there's volume of data that's being created. There's the velocity of it, and that is the speed that it's coming at us. And then there's also the variety. Now, that data isn't useful in and of itself, and we've all been in organisations, I'm sure, where there's plenty of data, but we don't actually have the tools or the expertise to analyse it or get anything meaningful out of it to drive business outcomes. And that's really where the next 2 buzzwords or themes of the moment come into the equation. So the next one that's listed on the slide there is artificial intelligence. And all artificial intelligence is a program that can ingest these large amounts of big data. It can make calculations and algorithms, and then it can iterate and improve upon itself to mimic human intelligence. So it's not just a static, I take this bit of data in, I take that bit of data in, I add it together. It's actually ingesting the data and assessing the data and making improvements to its own algorithm to produce an improving outcome. And we can go into a couple of examples later on about how that's being applied in fields like healthcare and agriculture as examples.
And they say something like the amount of data produced in 2020 was more than the entire amount of data in history before it. Does that sound like it accurate? I could have made it up, but
yeah, absolutely. I mean, there's so many anecdotes that get thrown around the place, but I think we see it absolutely every single day in our own lives in terms of the amount of data that we consume. Just doing the Zoom call now, 2 years ago or even 12 months ago, probably would have been a face-to-face meeting, which would have been great to see you in person, guys. However, the fact that we're doing this over Zoom and we're recording it does mean that it has to get stored somewhere. There's also the streaming that occurs as well. And so it's just exponentially increasing year on year. And when we look at some of the new and emerging technologies that are coming out, like, for example, autonomous vehicles, the statistic that we quote internally is that an autonomous vehicle is creating 4 terabytes of data per day. Now, to put that into context, that's about 16 times what is contained on a typical laptop in terms of total storage. So it's just going to keep on going.
And if we're looking at, autonomous cars are one part of it. For our clients, what sort of things would they be accessing outside of Zoom that relies upon the cloud? Is it just everything? Netflix, is that on the cloud?
Yeah, great question. So from a business perspective, there's applications that we use every single day, Office 365, Outlook and Word being probably the most obvious that we're all familiar with. In our everyday lives, anyone who's ever been through the painful process of resetting up an iPhone would know that every day we're backing up to something called the iCloud. That's basically Apple's cloud, where all photos and videos are stored. And that happens more than likely without most people knowing what's going on. But that data is actually stored in a data center somewhere, probably several data centers, to give a little bit of backup redundancy in case something happens. And when you transition from one iPhone to another, all you do is provide your encryption details and you've got access again to that same data that's located clearly not where your phone is.
And who are the players in that cloud sector?
So in terms of the players in the overall cloud sector, I think it's really helpful, and particularly so from an investment standpoint, to break it up into a couple of different segments. And given that we are in Australia, we do have a relatively narrow number of companies, but they are contained within the different parts of these segments. So first of all, when we think about the cloud, we talked about those servers or data centers that contain that data that's located off-site or not where we are. There's companies that actually own those buildings. So they're infrastructure providers, and that's commonly called infrastructure as a service. That's one section.
But it's just digital infrastructure. It's digital infrastructure on a subscription basis or a monthly basis.
That's exactly right. So I can call up NextDC, which is a data center provider, for example, and say, look, I've got all this data, I've been analyzing all these companies, I want to buy this much storage and this much compute capacity for the next 3 years, and I want to pay it on a monthly basis, and they'll house that server for me at their facility.
Yeah.
And that's why we like to say the cloud has 4 walls, because that, whilst it seems like a very esoteric and abstract concept at times, that data is actually being housed in a building with 4 walls. And we're fortunate at Firetrail, we've been to visit these facilities various times. In terms of the second part of the companies exposed to the cloud, there's the companies that actually run the applications that run in the cloud. So that's just software providers. And a good example of that would be someone like a Xero, or potentially in your industry, someone like an Iris, where Xplan software, or Hub or NetWealth, or something like that.
And where does Amazon and Microsoft, well, probably Amazon more so, do they own one of the, do they own a cloud, or are they leasing space within someone else's cloud? Are they building buildings?
Yeah, so Amazon and Microsoft, clearly 2 huge players in the space, and the cloud really has been responsible for driving the lion's share of their earnings growth over the past several years, and that's driven global stock market indices.
It's like 30% a quarter almost, isn't it? Their cloud revenue.
Exactly. Yeah, it's been a period of phenomenal growth, and I'm sure we'll touch on it a bit later, but it has accelerated during COVID. They play across the entire spectrum. So not only do they own the buildings, they also provide cloud services. In the case of Microsoft, it's called Microsoft Azure, and that's where Office 365 gets stored. And they also provide applications that run on those services. So they're, whilst I was segmented earlier, there are those very large cloud service provider companies like AWS and like Microsoft. They're playing across the entire spectrum.
And have you got a bit of a background on what? So there's only a couple. I assume there's only like 10 or 12 data centers in Australia.
Yeah.
Have you got background on what one looks like? What's important to consider in the cloud and investing companies? Is it just are you just buying property? I know a lot of them are structured as real estate investment trusts, which is very different to in the US anyway.
Yeah. Yeah. No, absolutely. So there are quite a few data center operators in Australia, and there probably would be around about 12 major ones, but there's also a large number of quite smaller companies as well. The 2 largest in Australia are actually Equinix and NextDC, and they operate facilities across Australia. So they've got facilities in Perth, Canberra, Melbourne. I don't think Tasmania is missing out at this stage, but potentially they'll have a data center down there at some point in the future. Just up on the slide here, you can see a visual representation of what these data centers look like, both from the outside and on the inside. So from the outside, they're typically located in a commercial type real estate park, pretty boring. And on the inside, I can't say they're too much more exciting either. What they effectively are is giant secure fridges with a lot of access to power, and that consequently provides the cooling and also a high degree of security as well. When you're outsourcing data from any sort of business, clearly security is a major concern. And when it comes to major corporations like the ATO, for example, there's a high degree of security required. So that, hopefully that gives you a bit of a flavour for what a data centre actually physically looks like. On that second picture there, that's what you see as you walk through the different floors of that building. So it's just racks and racks of basically what we used to have sitting underneath our desks, that's doing the compute and it's doing all the processing that we're instructing it to do from our laptops.
And how important is location? So am I walking past one in the city, or does it have to be in a reasonable? Is it out in Dandenong or something for?
Yeah. In terms of location, there's quite a number of types of data centers, and it depends on the application that you're using, the data center that you choose for location. So for example, this Zoom call, it's likely that it's being hosted at a location that's quite close to offices, because latency is really important, because you want to be able to see my facial expressions, and you want to be able to, in real time, hear what I'm saying and judge the tone of my voice. So it's quite important. But you can imagine for another application, such as retrieving some photos that you might access on Facebook once every 5 years, that's not a latency or time sensitive issue. It doesn't matter if there's 5 or 10 seconds of lag in retrieving that information. And so in that instance, the location of the data center isn't so important, and it's likely to be located on some cheaper real estate. And so, for example, in Sydney, the more expensive and lower latency or faster speed data centers are located quite close to the city, in that North Shore zone. So places like Macquarie Park or even down near the airport. However, the less speed sensitive applications are located a fair way out. It'd take you an hour and a half to drive there, because that's where the cheap land is, and the speed isn't as important to get.
And is the data center the same, or do they build them at different specs?
They are different specifications, yeah, absolutely. So there's different mixes of what we call storage and compute in those different centers.
How long does these hardware, the hardware that's internal, how long will that last for? Is that a 3-year period or a 5-year period, or is the speed of innovation that in 5 years' time it would be redundant and we can store the same amount of data on a size of a fridge that we used to do it in a warehouse? Is that happening? Is that a concern when you invest in these data centers?
Yeah. So typically, or what does happen in the case of all the listed data center providers in Australia, is that they provide the shell of the building.
Sure.
So that's effectively like the concrete structure you see on the outside, clearly the flooring, the mechanical and electrical and air conditioning systems.
Yep.
And the clients themselves actually provide the processing infrastructure or those servers.
Is that right?
Bottom there. Over time, what we've seen, and you're absolutely right, is an increase in the intensity and the data processing capacity per square meter in the data centers. And if anyone is interested, they can pull up some of NextDC's investor presentations to see some quite interesting charts on how that's changed over time. But clearly that processing capacity per square meter has increased quite substantially. And what that means is the amount of power that these centers are consuming keeps on growing and growing and growing. And so there is a natural refresh cycle that takes place. However, it's typically not the responsibility of the data center operator, it's the responsibility of the client.
There's a significant cost saving, I'm assuming, compared to, I actually think someone like Iris has their own floor of internal data for a portion anyway. I'm sure they put the rest outside. Massive cost saving doing that versus doing, outsourcing it versus insourcing the cloud.
Having the cloud inside. Yeah, there is. So there's various estimates out there in terms of what the cost saving benefit is from having effectively an on-premise solution versus having your data hosted in the cloud. The most recent one that I've read that was produced by Amazon Warehouse Services cites around a 70% decrease in the total cost of ownership as a result of shifting to the cloud. But cost is only one element why you shift to the cloud. The other one is speed, and the other one is flexibility as well. Because
insurance probably helps too.
What's that, sorry?
Insurance probably helps too.
Insurance, yeah. And security, yeah, absolutely. So cost is one driver, but it's definitely not the only driver, I think, is the best way to put that. If
you say one of the big inputs into a data center is electricity or the intensity of electricity, can this data centers fit through a ESG screen if it's using that much power, or how do you attack that from an investor's perspective? Yeah, absolutely. So when we look at a data center, 75% of the cost of goods sold is actually electricity. So it's a huge input, and it moves the numbers around quite substantially. In the case of NextDC and many of the other listed providers, they're very good in terms of providing that disclosure around the percentage of the electricity that is green. And clients, so they buy green electricity. Specify that as well, yeah. And anyone who's driven along the Westgate and into the city in Melbourne, as you look out to Port Melbourne on the left-hand side there, you can actually see an NextDC facility, and you'll see all the solar panels lined up on top of it. Sure, I'm sure that'll power 2 racks.
I was going to say there can't be enough power coming in from those to power the whole thing.
but nice visuals. So exactly. When you buy, who pays for the power? So if I buy 2 racks, I have to fit it out. So I buy all my equipment, bang, the pipes come in, store my data, and then I'm paying NextDC to have my racks in there. It's air conditioned, it's security. The power bill do I pay the actual power bill that I draw, or do I just pay NextDC a fee? And the risk of power pricing, is that NextDC's or mine?
Yeah. So in your case, Jamie, the risk is all on NextDC.
Okay.
Wattle Partners, whilst it's a fantastic organisation, it wouldn't have the scale to be able to buy in such a way that you'd have a contract where you have that power pass-through agreement.
Yeah.
However, if you're a very large customer, potentially an Amazon, who is also a client of NextDC's, then they would have that power pass-through mechanism in their contract. So if you're a small customer, NextDC, where's the risk? You pay a fixed rate. If you're a large customer, it's a pass-through arrangement.
They got it.
And the sector's growing quickly in Australia. I saw something like 30% growth in just sales revenue at NextDC, and estimates at 15 to 20% in the sector in general. Is that understating it, or?
It's really quite specific to the individual region. We've already talked to the North Shore region in Sydney, and also the region out west, where you have different types of applications that are being used for different purposes. So the speed of growth is actually higher in that North Shore zone that we talked to, where you're closer to consumers. However, broadly, that growth rate is quite consistent. The amount of data that's being processed through data centers is growing at about 35% per annum at the moment, and revenue, because you do get some cost deflation at the same time, is running at around about 20 to 25%. And when we look at our forecast for NextDC as an example, we're looking at EBITDA, or earnings before interest, tax, depreciation, amortization, growing around about 30% compound over the next 5 to 6 years. So substantial growth in this sector.
A bit faster than the economy at 3.5%. So it's considered a growth stock then.
That's right. Yeah, absolutely. And it does make it challenging from a valuation perspective. And it really does require you to look out 10 years and do a detailed discounted cash flow model to come to terms with the valuation on some of these companies, because we're certainly not the first people to discover that this is a great investment thematic.
And it will change over 10 years too, right? You wouldn't expect us to be sitting here in 10 years' time and talking about data centers in the same way we're talking about them today. I assume some of there has to be a cost benefit of outsourcing data being stored by, say, a NextDC versus doing it yourself. You would imagine that the pipes that take the data will substantially improve over that 10 years, or the packing of the data within the pipes will be improved. So, can you use a data center in Pakistan that's the same, is the same as the one that's down the road? Maybe. So it is obviously a really changing landscape. It's got exciting one, but it's changing at a rapid rate, isn't it? So.
Yeah, it is, absolutely, and it's challenging for infrastructure investors, because you're investing in the technology sector, which, as you point out, is moving so rapidly and growing and changing. But you're investing in what is really, in the case of data centers, more of an infrastructure style asset, whilst you do have that fast growth rate. So you're investing in a physical footprint of that. So keeping track of these trends is going to be incredibly important for investors going forwards. And as you point out, access to cheap land and cheap electricity does make for an extremely attractive place to build a data center.
Even though it's physical property, typically it's hard for it to be used for something else, isn't it? I mean, it's just a warehouse, but if you strip one of these back and try to rent it or sell it, you're probably selling it at 1/5 of the cost than you would as a data center.
Yeah, I definitely think that's a fair assessment. I mean, one of while we're so excited about data centers, and have been now for the best part of 7 years, is a couple of things. Firstly, you've got some of the best clients in the world. So you've got people like Amazon and Microsoft as your large clients, and then you've got a really great spread of SME businesses and medium-sized businesses like News Corp, for example, as well. They're really sticky because it's hard for them to move. They're long-dated contracts. It's fast-growing. These are just fantastic businesses, and consequently, they trade on high multiples. So if you were to just try and realise book value for the land or the building, you'd be selling at a discount.
Yeah, basically, every time that they extend, if they make their warehouse bigger, or if they add a new one, it basically sells out in a reasonable amount of time, doesn't it? There's this constant demand for it at the moment.
Yeah, there is constant demand, and it's a challenge because you've got an industry that's growing really quickly, and you need to be delivering to construction timelines as well. and there's been several delays that have been well publicised throughout the last couple of years, where there's been typical issues that exist on building sites, and actually there's been clients like Microsoft and Amazon moving into half-finished buildings because they physically need that capacity.
There's the stuff. I like it. But that's not the same for all companies, right? NextDC is phenomenal, and they've obviously got a great lion's share of the market. But without naming names, there's other ones in Australia that have data centers. Even the Balti Bridge, there's a data center right next to NextDC, and it's 2/3 empty. They can't get anyone to take the racks. So there isn't just build it and they come. You have to also have the elements of, sales and propositions and relationships and contingencies, because there is, and you would know this better than me, there is a number of those data center companies that are just struggling because they can't sign people up.
Yeah, I think that's definitely fair. And, when we look at what the competitive differentiator for a data center company is, company A versus B, it really comes down to having that sales force, as you point out, but having the network and pre-existing customer
trust, having trust,
attract everyone to go into your center, because there will be some stranded assets out there. So that's one of the reasons why we really like NextDC, because they do have what we call an ecosystem where they've got a sales team, they've got a large amount of pre-existing customers that actually acts to attract more customers to the business.
I assume it's one of those contracts that you wander in and you sign up. It might be a minor amount. It might be $50,000, $100,000, but it's based on volume. So 3 years later, you go back and go, "Oh, my contract's $5.7 million," because the data is, you're just growing at that massive compounded rate. And it's not just that; you're also adding other applications and other ways to use data. So.
Sounds like a great place to be invested in.
Nearly convinced me.
What's the risk that someone like Amazon builds their own data center here? We're not big enough and we don't warrant it. Is that kind of a...
So Amazon and Microsoft and plenty of other of the larger cloud service providers do actually have their own data centers, and Amazon does have their own data centers in Australia. So when they're assessing whether or not they...
for external clients or just for their own?
What's that, sir?
They don't do external. It's more for their own.
It's for their own
business. Yeah.
Oh, it's for Amazon Warehouse Services. Yeah.
So they do have external.
Yeah. So when you go to the Amazon
external?
store, it's yeah.
Amazon store, and you can use Amazon as your cloud provider.
That's right. Yeah.
So. This is really into the weeds and definitely not on our agenda. But when you buy the rack, right, is it like the old server that you had out the back that Drew used to change the tapes for? Does it have, a hard drive and a motherboard and a CPU? And is it exactly the same as that, or has that technology moved on now and it's totally different?
It's so specific to the client. It really depends on exactly what that rack's being used for. It could be just being used to store photos. It could be being used to house, Netflix streaming content, or it could be being used to mine Bitcoin or perform AI operations for a healthcare operator. So exactly how the box is configured and the types of chips and the processing units that are in there will depend on the application. So,
So that's a way to play the cloud as well, essentially, is if you go, to NVIDIA, and I assume a lot of the stuff in these data centers is produced by, Intel or NVIDIA or the like. So you can play it by the devices as well.
You absolutely can. Unfortunately, there's not many of those listed in Australia, but the likes of Cisco and Juniper and all those kind of guys are definitely, have been big beneficiaries and will continue to be so.
Is there anyone else in Australia that supplies product into the data centers? Is there cleaning services or, security services or
Origin?
Oh, definitely electricity providers.
Origins, yeah.
that makes Origin a tech company. That's good.
Put on a revenue model there.
That's right. Cheapest tech company in the world.
Well, we can talk about the electrification thematic maybe in another webcast, but the biggest constraint on being able to build data centers in Sydney at the moment is actually the amount of capacity that's available in the electricity grid. So it's really hard to find a site that's located close to consumers where you can actually access the grid itself.
It has to be uninterruptible too, doesn't it? So they need to have a backup to support an electricity network.
I mean, that's not well widely known, is it, Matt, that when you get a site, and I was in food manufacturing for a bit, and you find a great warehouse and you go, all right, we want to put these X amount of things in this warehouse, and they go, oh, well, there's only 100, I can't remember, I've wiped it out of my mind, but there's 150 amps to the corner, and you go, yeah, I need 3,000. And then they go, okay, well, you have to buy it and you have to wait, and it's 2 or 3 years before we can do that. There's a transformer that'll cost 900 grand that's got to go out the front. The perception of I'm assuming our investors would be that you just buy a site and you plug it in and you get as much as you want, but it's not the case with commercial real estate and electricity.
Yeah, absolutely, and that's why when you speak to the next DC management team and the cloud service providers as well, they're planning out on a 10, 20-year horizon and working with grid providers like obviously the state governments, but also AusNet and the electricity providers to actually ensure they have enough access to electricity.
Yeah, fascinating.
There's one company I've never been able to understand, but I'm not the...
there's like thousands. I don't understand.
There's one, I've never been the Buffett where, if you don't understand something, don't invest in it. I'm more like find out more about it. And, if you did that, you wouldn't invest in anything. Megaport. It's involved in the cloud, but I still don't get it.
Port, I assume.
You got a good slide there that kind of probably explains it to the layperson like me.
Yeah, I think maybe before we dive into Megaport, I'll just sort of frame it up on this slide first, and then we can step down to the slide that I just had up on the screen before.
Sure.
So you can see on this slide here that there's lots of different servers or lots of different data centers in the world. Hundreds, if not thousands, globally, and it's really important to be able to actually connect these data centers together and connect users to these data centers. And so there's a big market in that connectivity. So it's not the storage of the data, it's actually connecting the cloud together, if that makes sense to you guys. And what Megaport do effectively is provide connectivity solutions between data centers and between cloud service providers.
Because if you're like the CBA, you don't want to have all your data in one spot. Is that still that kind of concept?
Yeah, absolutely. So if you're CBA, you're not going to have all your data sitting at NextDC's data center in Macquarie Park. You're more than likely going to have a backup site, probably in Melbourne, as well as one somewhere else in Sydney too. And it's really important to have those data centers connected to each other, but also connected to the other various applications that you'd be using. So say, for example, if you're a CBA employee and you're using a software application like, let's say, Xero, it's really important that your data center is connected directly into Xero and they're porting that data center. So you want to be able to use that service really seamlessly. Yeah. So it's effectively just connecting up those different bits of the cloud, right? You can make it as complicated as you want, but it's that simple. You got this cloud, there's lots of four-wall buildings everywhere, but to actually make it useful, it all needs to be connected up.
And do they do that by software, or are they carrying cables from one to the other?
It's cables. It's got to be cables.
It reminds me of the power lines in Thailand.
So each one of these ports on this diagram represents a point of presence, or effectively think of it like a data center or a cloud.
Yep.
In a particular instance. And what Megaport do is they have both the physical cables that join data centers together, and they also have a software that sits over the top of these cables. And what that enables people to do is say, all right, Jamie, I want to connect the Wattle Partners server to the Firetrail server. I'll go online on the Megaport system, log in, and I'll say point and click, and they'll provision that service for me virtually. So we don't physically need to organize that cable ourselves. We can just do it via a cable that they already have. So it's called a software-defined networking service. That is, you've got a physical footprint that connects something together, and there's a software element that goes over top.
It works out the most effective and cost-effective and quick route to get my server and your server connected.
Absolutely, yeah.
Yep.
So back in the day, we might have had to call up our mates at Telstra and say, look, I want a service, and they'd say, all right,
I
mate,
did, and we're still waiting.
Here's a copper line.
it's going to cost you $3,000 a month. You know, you've got a 3-year contract, and if you try and get out of it, then we'll hunt you down. And it's going to take a long time to provision. With Megaport, you can just go online. You can do it yourself in a couple of seconds. You pay by the month. It's only a couple of $100.
Yep.
So far better outcome for consumers, and is really necessary.
And Rob, maybe that's a good segue. I know you're smaller caps, but Telstra's trying to demerge all their infrastructure. Do they have these kind of assets behind them as well? Data centers, and I know they've got a lot of random looking buildings in every part of Australia. So
Buildings with no windows.
yeah,
There's one in the middle of Adelaide CBD, and it's like, it's 20 stories without a window. You can't really repurpose it, can you?
That would be a tough one to repurpose. Although I've seen offices that are worse. It's I'm not overly familiar with exactly what Telstra are planning, given that that's quite a large cap stock, and my focus is on the small cap index. However, I do know that they have quite a number of quite small, but what I'd call legacy data center assets, and by that what I mean is that they've been in place for a long time. They've got lots of smaller clients who have software and hardware running within those buildings, but then they haven't gone out and created a business like a NextDC, for example, where that is their focus. They're primarily a telecommunications provider, and so it does make sense to demerge that part of the business, particularly when you consider the multiples that NextDCs and those sort of assets are trading on versus Telstra proper.
Are there any other companies? I know we mentioned Nuix before, and it's not in cloud computing.
Yeah.
Is that something in your purview?
Yeah, absolutely. So some of the companies that we haven't talked about, we're focused with NextDC being a data center provider. Clearly, we've talked about Megaport, which provides that connectivity between the data centers. But what we haven't talked about is some of the companies that actually provide the software that runs in the cloud. And so when we think about those sort of businesses, we've got on the ASX, there's businesses like Nuix that you mentioned, Drew. There's businesses like Xero as an example as well. And they're really, they are quite different businesses, but very similar in some ways as well. And that is that they actually have their main IP is a software asset. And when we look at these types of businesses from a small cap investment perspective, they're clearly quite attractive. That is because of the high level of IP, but also because of the strong margins that they generate, typically 70% plus gross profit margins, and also the recurring nature of that revenue. In the case of Xero, for example, we've seen over time that that subscription base is extremely sticky and does tend to grow as people add on more and more and more modules to their subscription base.
Like the picks and shovels or the service providers too, you're basically finding the people that make it easier for consumers to access these major technological advances.
Absolutely. Yeah, that's right. I mean, prior to this webcast, Drew, I think we were talking about some of Mike Cannon-Brookes' quotes and him basically saying that every company in the world is going to fit into two buckets, and that is they're either going to become a software company or they're going to be disrupted by one. And when I look around our own business, and I'm sure your business as well, I definitely think that is the case, because what software does is it enables us to operate with far more productivity, provide better client outcomes, do things faster with less costs. And software is just been such a strong driver of that. And if you don't implement these solutions in your business, like Xero, like Salesforce, and you're stuck in the old world running an Excel spreadsheet from a box, then you're just going to get left behind. So I think there's a great deal of truth to that.
Yeah, I think we're reasonably advanced, but we'll be nowhere near the way an Apple or someone would work, where everything's seamless. Obviously, nor should we be, because we're not a $1 trillion company, but using as much cloud as possible and simplifying all your internal processes. So
we're leading financial planners, Drew. Typically, we're a pretty backward lot, so it's not that hard to lead them.
Yeah, I think another important point here is Australians typically look at our index and say, there aren't these great investment opportunities, and there's a bit of a tendency to say if you want to invest in technology stocks, you need to look at the NASDAQ, you need to look at the Microsofts and the Apples and the Amazons and that type of thing.
Sure.
But what's really important to recognise is we have some great homegrown technology companies here, and Australia is actually quite advanced in terms of our own businesses in adopting technology. Anyone who's been to the US and tried to do business over there would understand just how advanced many Australian businesses are.
Sure.
And companies like Xero, companies like Megaport, these are relatively small in a global context, but they are truly world-beating companies in terms of the services that they provide. And they're some of the fastest growing companies when we look across all markets, NASDAQ included. And I think it's also relevant that Atlassian was growing here in Australia as well. So we do have a great technology scene here, and we do have a lot of really great cloud-exposed companies.
Yep.
I think
Why do you think that's the case? Why do you think? Is that because we're essentially isolated from the rest of the world, so we have to kind of leverage tech, or essentially, why do you think that we're pretty good at tech?
Oh, it's a good question. I don't really. It's not something I've thought about, to be honest with you. I mean, yeah, Australians, we are quite colloquial and pretty sarcastic. Sure, you guys are a bit different, but I think that we also have an element of entrepreneurialism, and people like Bevan Slattery, for example, up in Brisbane, who's been a serial entrepreneur in this space, starting companies like Megaport and NextDC and Superloop. We've had a couple of really strong entrepreneurs come through and transforms the local sector.
It's awesome, isn't it?
I don't really have a good answer to it.
No, it's good. It's fine. I mean, ultimately, it's a good thing for Australia, isn't it, to be entrepreneurial in technology. That technology then can go to the world. So
yeah, no, absolutely.
What else are we talking about, Drew? We've got so big data. I mean, big data is really interesting, and Drew and I came across big data for the first time. I acknowledged it. Big data was, and I've said this a couple of times on our podcast, Drew and I were in a Pine Bridge conference, and we heard the CEO of Ant Financial talk about how he's building a financial services business under Alibaba. And one of the things he was talking about is assessing home loans or assessing credit from just big data. And he talked about the old system of getting a home loan, or actually it wasn't a home loan, it was just a credit facility for a trading company that's on Alibaba. And he said, well, the first thing you normally do is fill in an application form. And then there was some amazing stat that 75% of people fill out an application form for a loan, and we won't use the word fraud, but let's just say extend the truth on the application form. But if you use big data to assess that person, and obviously Alibaba had their trading history, but then you're educated and you're in a certain suburb and you've got a certain education, you're certain health, and and you can get all that data from the web, and then profile, and you can use some kind of AI to assess all that data. You could, and they were using it back then, which is 3 or 4 years ago. You can assess the credit worthiness of an individual like 5 to 6 times better than you can having a credit team look through an application that typically will be stretched in terms of truth. And that was quite amazing. And then what he was doing on his system is then doing automatically for everyone that had a CMT, and applying a credit amount, a pre-approved credit amount in the right-hand side. And if you wanted it, you double-clicked it, signed these terms and conditions, and you've got access to credit. But it's a really interesting use of big data, and we haven't talked about big data much. Do you see other groups using big data, or big data is just really in every business at the moment that are all striving to get who's clicked what? What's my return on investment from advertising? How do I sell? Salesforce is, of course, really good on big data.
Yeah, no, it's all good points. From a home loan perspective, definitely there's been a number of companies come to the market just in the last 6 months actually that have used this as a point of differentiation, effectively saying we can lower our credit losses, more effectively target customers with a better rate to grow our books because we know about them, and that's a great use case for big data and machine learning. I would say that if you download any ASX 200 company presentation from the last couple of reporting seasons and you do a word search for big data or artificial intelligence, you have to assume that every company in the ASX is a technology company. But I think there's very few that are truly, actually doing it rather than just using these buzzwords.
Who was that group, Drew, we were talking to the other day, and they use AI to analyze announcements by companies, and where as soon as they see the company's words change, as soon as they see tonal changes or repeating of words, they kind of start smelling, if you like, a downgrade, or that they're trying, obviously it's gone to the IR firm. The IR firm is trying to talk about things that aren't relevant. And it was essentially an example of using kind of big data, AI, and machine learning to a degree to assess the written word from individuals.
Yeah.
Do you remember who that was, Drew?
I can't remember. I know there was someone talking about announcements from the CDC regarding COVID. I'm not sure if it was that one where the wording slightly changed, and that kind of. But I wish I didn't have to read annual reports. So if you can send me the technology, I'd love it.
Yeah.
All right, let's find it. Sounds
there was an experiment done. That someone tried to build an algorithm to analyze Donald Trump's tweets and actually trade off the back of that.
Sure.
There's
no algorithm. Imagine algorithm. There's got to be a set pattern to be able to build an algorithm, right?
Maybe it's a bit too random for these.
Yeah.
But just in terms, Drew, and Jamie, of other like relevant examples on the ASX where big data is being used really effectively right now, I think a really interesting one is radiology. So you'd be aware of some of the listed radiology companies. One is Capital Group, and what they're actually doing now is using big data to analyze the images that radiologists receive to identify issues. So traditionally, you just rely on a radiologist looking at a scan and saying, Drew, I think you might have something a bit strange going on there. But now they're actually doing that with an algorithm that's ingesting the data and performing a second check. And what that's done is really increase the efficiency by around about 30% in some cases for the radiologists. So it's enabling them to basically get the patients through faster, provide a better outcome, and it's all enabled by that use of big data and machine learning.
So that first step of that, which the cloud probably provided, was telerad, wasn't it? Where basically you would get your X-ray read anywhere in the world, 24 hours. You didn't have to have the radiologist in the hospital in Melbourne. It could be in, Shanghai or Chicago, and they could read it. So now they're using that kind of digitization to then put AI over top and to see if they can see anything else. It's really interesting, isn't it?
Yeah, it's fascinating. And over time, as you can imagine, that as you calibrate that system and it keeps on itself learning, the algorithm, it gets better and better at identifying different issues. And so moving
that they've missed.
Yeah, exactly. Because people can go back and say, "Hey, machine, you missed this. You need to get it next time." Over time, that system.
Unlike a doctor, you can't say that to a doctor. Drew's wife's a doctor.
No comment.
She's probably heard that, and she's about to walk in. So, yeah, good. All right. I think we've spent nearly an hour, Matt, and I think it's a great intro to this theme. And the theme is sometimes it's hard to pick the specific stocks that are attached to the theme, but these are two themes that are nearly affecting every company in the world in one way or another at the moment. So super interesting chat. Really like the focus on Australian small caps, where people can see and breathe and feel the companies we talked about today. So really appreciate your time, Matt. Thanks very much. Hopefully you'll come on again soon.
Yeah, thanks, Jamie. Thanks, Drew. Thanks for having me, and it'd be great to be back at some point.
Yeah, no problem. Thanks, Drew. Cheers. See you guys.